Hey guys, Scott here. All right, let's talk about one housing topic that always lights the internet on fire. Right now, I'm seeing The Guardian, the AFR, and pretty much every major outlet covering this. I'm seeing pressure building on the government. I'm seeing unions weighing in. I'm seeing comment sections absolutely explode. And it all comes back to one thing, the 50% capital gains tax discount. People are saying scrap it, get rid of it. They're saying it's greedy investors. They're saying housing has become a wealth hoarding machine. They're saying if we get rid of this one policy, the housing crisis finally gets fixed. And honestly, when I read the comments under my own videos, when I see the sentiment out there, I just keep thinking the same thing. Do we actually know what this policy is doing? Do we know who we're targeting? And do we really understand what happens to the housing market if this gets ripped out, if we get rid of it? So today, I just want to have an honest conversation. No politics, no slogans, no finger pointing. I want to prove to you and show you some data, some economic modeling, and some uncomfortable truths, and then you can decide whether scrapping the CGT discount actually fixes the housing crisis or whether it could potentially make it worse. And if you disagree with me, I generally want you to tell me why in the comments. Let's break down the whole thing now. Let's start with the basics. The capital gains tax discount means that if you hold an investment property for more than 12 months, you only pay tax on half of the capital gain when you sell. That's it. That's the policy. And right now, it's under heavy fire. Unions are calling for it to be phased out. Some economists say it's overgenerous. A lot of people online believe it's one of the main reasons housing is so expensive. The argument goes like this. If you remove the discount, investors will step back. If investors step back, first-time buyers finally get a chance. Prices come down, crisis solved. It sounds neat, it sounds logical, but housing is never that simple. Before we even talk about changing policy, we need to reset something in our heads. Because when people say investors, most Australians picture a tiny group of ultra-wealthy people sitting on dozens of properties. That is not who most investors are. According to ATO data, the majority of Aussie property investors are everyday Australians. Most investors own one investment property, a smaller group owns two, and a fraction of those investors own large portfolios. We're talking teachers, nurses, tradies, middle managers, small business owners, people who bought a home, built some equity, and bought one investment property so that they're not entirely reliant on super or on a pension. This isn't opinion, this comes straight from the tax data. The idea that Australia's housing crisis is being driven by millions of people hoarding 20, 30, or 50 properties just doesn't match reality. Those high-end investors exist, but they represent well below 1% of taxpayers. And here's the part people really miss. That small group of larger, more sophisticated investors overwhelmingly funds new supply. They're not lining up to outbid first home buyers at auctions in inner suburbs. They're financing townhouse projects, apartments, and new housing in growth corridors. So when people say punish investors, they're not targeting some abstract villain. They're targeting the very group that finances a huge share of Australia's rental and new housing stock. Now let's get to the part that almost no one wants to talk about. Australia does not have a demand problem. Australia has a supply problem first. We are not building enough homes. Everyone agrees on that. And here's the key question. If you make property investment less attractive, especially long-term investment, what happens to housing supply? What happens to housing construction? What happens to brand new apartments and brand new house and land packages hitting the market? Because a huge amount of new housing in this country is funded by private money, private capital. It is not funded by government. It is not funded by councils. It is actually funded by mum and dad investors. When you reduce the incentive, investors don't buy. When investors don't buy, some developments don't stack up. When developments don't stack up, fewer homes get built. So yes, you might call investor demand at the margin, but you are also risk shrinking future supply. And when supply shrinks in a country with strong population growth, strong employment, and chronic undersupply, prices don't collapse. They tighten, rents rise faster, competition intensifies for the remaining stock, first-time buyers don't suddenly win, they just face a different version of the same problem. That's the part missing from most of the headlines. This isn't just theory. Now, economic modeling by AHURI has already examined what happens when investor incentives are reduced or removed. And the consistent theme is this: if you reduce investment from mum and dad investors without fixing supply, housing affordability does not magically improve. In some scenarios, prices actually end up higher over time because construction slows faster than demand, fewer homes get built, vacancy rates tighten, rents rise faster, and first-time buyers don't suddenly win, they just compete harder for fewer options. This is the economic reality. If Australia genuinely wants affordable housing, the solution isn't symbolic tax changes. It's supply, real supply. That means faster approvals. It means unlocking greenfield land with proper infrastructure. It means high-density approvals where people actually want to live. It means importing more tradies, not fewer. It means making projects viable again. And until the government can do that at scale, Australia relies on everyday investors to bridge the gap. Not investors buying 50 properties, not speculators flipping houses, but ordinary Australians building 1 or 2 homes, funding developments, and providing rental stock. And if mum and dad investors take their capital away from brand new housing, you will have more of a supply problem, which is the core problem for housing affordability for everyone in this country. This would be the perfect way to choke the pipeline. Now, Bill Shorten found this out the hard way in 2019. The politics alone tell you how sensitive this issue is. This policy won't be scrapped, and even if it were, it wouldn't fix what people think it fixes. So when you hear people say, just scrap the capital gains tax discount and housing will get fixed, I want you to stop and think, who actually builds the homes? What happens to supply? And who really pays the price? Drop your thoughts in the comments. I'm generally keen to hear where you land on this. As always, this is your daily property update, your 5 to 7 minute breakdown of what's really happening in the Australian property market so that you can become a property insider. I'll see you all at the next video.